Hi everyone, Pete here. Today is Sunday, September 22nd, 2024, and I am going to review the watch list for this week. Some of these tickers were based off of requests, but just wanted to show you what I'm thinking, what my bias is going to be going into the week. So, to start, first thing I want to call out is if we jump into, I always like to start off with futures. If we start off with futures, I mentioned this, I believe 2 weeks ago, but bias is automatically going to be bearish to start because there is an SMT divergence between ES, NQ, and YM, and I'll show you where that is. So if we look here, we can see that ES has made a new all-time high last week, right? If we look at YM, which is the Dow also made a new all-time high. But then, if we look at tech did not. And tech didn't even come close. So that is a bearish divergence right there. So that's something that I'm going to be watching going into this week. Something else that I want to call out is that if you recall, Friday, what I was calling for, let's go to the 15-minute. I was looking for this area to be taken out. I called it all day, and if you look at the end of the day, at 3:30, we had that big push up, and then we had a pretty nice rejection off of that level. So what I'm going to be looking for now, you can see that on this push, these pushes up, we generated all of this sell side liquidity. So I'm going to start looking for this to be taken out. Oops, sorry. And this is on the smaller time frame, right? This is on the 15 minutes. So let's zoom out. I don't want to focus too much here. One thing that I do want to call out is that we do have what I was looking for is for these levels to be taken out here. And excuse the gap. I think my chart's still screwed up from the contracts changing over. But I do like this relative equal lows down here. I would like to see us test this area at some point in the near future. So let's zoom out a little bit. Another thing to call out is that we do have this daily fair value gap below. And again, if you don't know what a fair value gap is, it's part of the ICT concepts, but it's when the wicks don't touch. You have either a big push up or a big push down, and you can kind of view it as an imbalance. Usually for proper price discovery, the market likes to retest these areas, and typically it likes to test the bottom one. So the interesting thing about here is that if we make it down here over the next week or so, and that would be probably in the 5540 range, that would bring us down to the golden pocket of this recent move. And that would also pretty much allow us to test both fair value gaps that I was targeting. And that would bring us to this golden pocket. So what I've noticed is the market or the algorithms tend to like the 707. So that would actually allow us to completely fill this daily fair value gap, which would be great. And this gray box is, I believe, a 4-hour order block. So wouldn't be surprised to make it down here, test this area, and bounce off. The reason why I think we're going to kind of ignore this first daily fair value gap is even if you look on the 4-hour, it's not much of a gap. I like this area here. Like this just looks like an area that needs to be retested. And then on the hourly, we have all of this sell side that could be taken out on the way down, which would help fuel the push down. And I'll show you also, there's another reason why I'm bearish, and that's looking at the Apple chart, which I'll show you soon. But to kind of bring these levels to SPX real quick. So, sorry, I just want to make sure that yep. Okay. On SPX, by the way, like this is my bullish target eventually over the next couple months. But if we look here, we made new all-time highs last week. But while we did that, we left behind some imbalances and some fair value gaps that I believe will get tested and filled. So again, early in the week, we could push up. I don't think we're going to. I think that we're going to start off the week bearish, and then we could push up towards the end of the week. But again, even on this chart, what we have the two fair value gaps, and we have the daily sitting right in this golden pocket, and the 707 again happens to be right at the bottom of this daily fair value gap. So I would love for us to test the 5,500 area on SPX, and hopefully that would give us fuel to push up to new all-time highs and take out my target up here over the next few weeks or a couple months. So obviously there's a lot of news that we're expecting over the next few months with the election and all that. So who knows what could happen, but kind of just what I'm seeing. So, something like that, and then go up to all-time highs. So now let's look at the next one I want to look at is Apple, actually. So Apple, the interesting thing about Apple, and I was posting about this the past week or so, in case you don't know, let me just leave this chart for a minute and go to the Apple chart. In my opinion, Apple is in macro distribution. So if you're looking at Apple for a long time hold, what I'm going to say to you is good luck. Doesn't mean that it can't. Sorry, I don't know what's going on here. Doesn't mean that it can't make new all-time highs. Feels like it's unlikely. But even if it did, big players are selling, and I'll even show you what we saw last week, which was pretty crazy. So if we go to Apple Daily, I called this out through my posts. Apple had a nice bounce here. I believe there was, let's see, is it 4 hour? Yeah, so there was some liquidity here. What it ended up doing is it sold off hard, then bounced at this liquidity. And if you caught calls, you made a killing. I unfortunately didn't play it. But once we made it here, what I was targeting, if we didn't reject this fair value gap that it created, I was targeting this buy side level. And so what happened at this buy side level? We had a big rejection. And look at that volume. This volume is, I think, over 300 million. I can't even tell you the last time we had volume like that. Maybe here, which ended up being a doji. So that's significant in my opinion. I don't know if Warren sold even more, but this is significant. And I think this is what's going to pull down the rest of the market too. So what I'm looking for now that we rejected, so again, could get an early push up to really make sure we sweep the buy side here. And then at this point, I would have to assume we're going to be on our way to take out this imbalance and test this imbalance in the 210 area. And then if we see a lot of weakness, we should see a test of this sell side liquidity over the next few months. I don't think that's going to happen in the near future, but just something to look out for. So in my opinion, I like the risk reward here for short side. So I would not be in comments here. All right, so from Apple, let's take a look at Google, because The interesting thing about Google to me is that it has been lagging behind. But what I do like about it from a bull case is that it's bouncing. It had a nice bounce off of this golden pocket. And so what I believe we want to do is we want to start taking out this buy side level here. Once we take it out, we'll probably see a pullback. But I do think we're on our way back up to this weekly fair value gap. And even I believe this is a daily gap. Yeah, daily gap. We might not make it all the way up to the gap. But what I was kind of thinking is that we can maybe take out this buy side level. But this all depends on if there's news. I know, let's see, we have earnings in October. So this could happen on its way up to earnings. But if the overall market is showing weakness, that might negate a lot of this. I just thought it was interesting that Google looked to be lagging and that I could see more upside potential compared to, the Apples and the Microsofts and even the NVIDIAs. So even though if we want to jump into it real quick with NVIDIA, this is kind of what I also think NVIDIA is in distribution, but it's not as far along as Apple. So I think we fill at least one of these imbalances before pushing up to start taking out these buy side levels. What I do like is that it did generate all this buy side. So we should, once we get up here and get over this area, we should see a nice push up. But sorry, back to Apple. The one thing I also wanted to call out is that if we could stay above, so right now it looks like it could bounce off of this fair value gap, and that might give us enough juice to really take out this buy side level. So I'm kind of bullish over 230, then bearish under it. So just one thing to call out, I would be patient with this one. We might see a nice gap down because of the volume here. I would be patient and just kind of see how we react. It's called an automatic reaction. So if a lot of people swung puts and were short through the weekend, they might close out their position, and that kind of forces some upside pressure. So something to look out for. Okay, so Apple, Google. What I want to show you next is MU because I believe there's earnings this week. And so, sorry, this one's on. I randomly have this on the wrong chart. So this might not look like it from my path, but overall with Micron, I am leaning bullish. So what I like about it so far, if we go to the weekly, it did catch the 0.5. I would have liked to see in the 0.5. I drew this from, sorry, let me hide this. It gets kind of messy. From the bottom here to the top here, I would have liked to see a stronger bounce. So what I think is going to happen, you can see there's sell side here, there's sell side here. I wouldn't be, and there's a gap here. So I wouldn't be surprised to see a push down going into this week. This would be a significant push down. So it would have to be news related, I would think. Yeah, that would be a 20% drop. Let me look when. Just looking to see when Micron earnings, September 25th. So that gives us a few days. If the market's really bloody, who knows what could happen? Yeah, I don't know. This might be leading up to earnings, and even post earnings, maybe we see a big sell off. But if we do, I would buy the dip because there's a lot of imbalances and fair value gaps above, as well as buy side liquidity that was generated. So I do like the upside potential here. Another one, I just want to be patient. What I would look to do and what I'm going to look to do, play post earnings and probably get calls for either October or maybe even January for this one. So all right, so next would be JP Morgan. Again, wrong chart. Let's go back to this one. All right, So JP Morgan to me overall looks bearish. What we could see we're doing now, well, so just to kind of recap, so the bull case would be that we did bounce off of the golden pocket. And so usually that's pretty bullish. Could see a run to test near all-time highs. What I'm leaning towards, though, is that we bounced to come up and test this fair value gap that was left here. Again, see the wick here, wick here. We're making it back to the discount range. I do think, here's an order block. I think we'll make it up to the top of this daily fair value gap and then continue selling off. We could even sell off from here. This was a high volume candle as well from Friday. Friday was OPEC, so it's not abnormal. I just thought that Apple's was abnormal just given how much volume was in there. So if we do sell off, I do think we're going to start tapping the liquidity below in like the 190s area down here. And it's also relatively equal lows. In case you're unaware, relatively equal lows and relatively equal highs tend to act like magnets, and eventually price will start gravitating towards those areas. So I think that's where we're going to start heading for JP Morgan. It's just a matter of time. So this is one that I'm going to be looking to go short. At some point, I want to see how this week plays out. And then Netflix was another one that was asked about. All right, so Netflix. The interesting thing about Netflix to me is that we made it up to the buy side liquidity here, which is all-time highs, right? And it also happens to be the 786 extension, which we rejected. We tested it here, we rejected. We made it slightly above. Personally, I would have expected a harder rejection if that was it. I think we're really going to sweep here, and I think we could make it up to these levels that I have up here. I'm targeting anywhere between, I think 769 makes a lot of sense. The thing about this, though, is that I don't feel like if you look at this chart, I don't feel like volume has supported this move up. So I do think it comes down, and I think it comes down hard because the way that this moved up, look at all, and this is on the weekly, so there's definitely more if you drill down further, but look at all of the sell side liquidity that it generated. And when it does that and it gets going, this is just fuel to the fire. I could do this all day. You get the point. Here, 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 here. So when you have price increasing like this and you don't have volume that supports it, that's automatically a red flag. But then the way that it did this, and you could see like there were fair value gaps, so it came back and tested the fair value gap, which is overall healthy. Looking at the volume and then looking at how we generated all this sell side, I think once this move is over, there might be some sort of catalyst, but I personally think it could fall pretty hard. And keep in mind, this is the weekly, so this is going to be, so far I'm pretty bearish for 2025, 2026. So if we do see something during that time period, this is one that could really fall hard. But again, if we drill down further, if we go into the daily, we bounced off of the golden pocket extension here. We generated the sell side. We have sell side here, and then we had a rejection here. And this is the buy side. Again, I think we're going to continue to push up. Let me see. We could see some crazy move up here, and then I would like to see a big rejection here with a lot of volume, because that would signal that a reversal is really coming. Similar to what we saw here. what happened here is there was sell side here, you can see. And what ended up happening is we came up. This must have been earnings up, earnings sold off hard, then had a strong, then bounced, retested. We really wanted to make sure we grabbed that liquidity because that was going to be the fuel that pushed us up to these all-time highs in this buy side here. So again, looking to see if we can push up further here. Just wanted to drill down a little bit further on the hourly. Same thing here. So we had liquidity here, came down, grabbed that liquidity, didn't get everything that it needed, came down, took more liquidity, and then pushed up to really bust through and make new all-time highs. So I'm bullish on this one in the near term, and then pretty ultra bearish long term. All right, so the other thing, so what I'm paying attention to too, so small caps should benefit significantly from rate cuts. So I've been paying close attention to IWM. I've been paying close attention to AFRM, which I'll go get into a little bit, and then I've also been paying attention to Upstart, and then of course like GME, which I'll also get into a little bit. So sorry, I don't pay for TradingView. I should. I'll probably change that. With IWM, I do think that it's on its way up to this buy side level here. And also, in case you're unaware, IWM, I do believe in macro accumulation. I believe it's in its final phase of accumulation. So should see a pretty nice pop over the next few months. So that's something that I'm paying attention to. But I wouldn't be surprised to see a retracement from here. We didn't have what we needed to take out this buy side level just yet. So again, we've left behind some imbalances and gaps that I think we are going to fill at least some. So also, the reason why I like using fibs is because the big players like to they like deals, right? So they want to purchase things at a discount range. So a discount is anything anything at the 0.5 or under. And so if we look, the interesting thing about the 0.5 here from this recent move is that it's right above the gap. So they could tease a gap fill and not actually fill it. But ideally for me, what I would like to see is this weekly fair value gap here. I would like to see we get to at least the 50% range of that weekly fair value gap, which happens to bring us to the golden pocket. So I would be looking over the next week or so, a retracement to the 211 area could go as low as like 208-ish. And from there, that's when I would be looking to get calls, longer dated calls, giving myself some time. So probably January. But I do think we bust through this buy side and really start making our way up to this area. Also, if we zoom out a little bit on the weekly, you can see that this has been acting like demand and has been catching us. We didn't even make it down to this level this last time. We continue to make higher lows, which I like to see. Here's where we saw a little bit of a change and didn't make a higher high, which is also why I think we can come down. So if the market really takes a hit over the next few weeks, I know there's quite a few folks who are pretty bearish. I'm not there yet. We could come down and test this area. Feels unlikely. I think we just need to come back to the discount range and then make that new high, but something to be on the lookout for. That's why I want to wait to see confirmation. I want to see how we react to this area before jumping into calls. All right, so AFRM is one that I played calls on a while back. I think it was like over 2,000% play. And then I also have commons. I like this chart overall. Like if you zoom out, I think it looks great. Like look at this bullish volume. It's really supporting this move up. Like if you compare this to that Netflix chart we looked at earlier, this volume supports this move up, right? So what you could see here is we rejected. Sorry, I'm like trying to figure out. I don't know why I have the fib drawn like that. I think I had it here. Yeah. Okay. So you could see that we rejected the 0.707. Remember what I said? The algorithms tend to really like that 707 area. And so from here, wouldn't be so. I'm a little conflicted, to be honest, on this one, because what I do like is that we saw consolidation here, and we had a retest of this fair value gap, this weekly fair value gap. And so typically that's pretty bullish and you can keep pushing up. What I don't like is that we rejected at the 707 so far, and we weren't able to make it up to this buy side level yet. So I wouldn't be surprised to see a pullback, fill this imbalance here, maybe bounce around the 40.57-ish area. You could even see actually on the daily, there's a fair value gap here. So maybe look out for something like this before we hopefully head up to take out that buy side level. So this is where I'm going to start cutting my commons. But I am like very bullish on this stock. I'm looking for us to eventually take out this buy side level. That would be amazing. And then I don't know if we'll ever get up there. Like that would be super, like that would have to be a squeeze probably. But I do like I said, I'm going to start scaling out of my comments here. I would like to see us test this weekly fair value gap in the 1.618 extension in the $80 range. Again, let's see how the week starts out, but I might start looking to get back into calls for January on this one because I am super bullish on AFRM. So the last one I wanted to just briefly touch on is GameStop. I have this theory that it's super interesting to me that GameStop tends to like to run on Fridays. And my theory there is that they want people talking about it. They want all the conspiracy theories to come out about it all weekend and get people really excited about it so that they FOMO in on Monday, only to grab all those premiums as the market maker and have those calls end up expiring worthless. So that's the one thing that I'm really cautious about. And also, like, it's really hard for me to be bullish underneath this area. I've been posting about this for a while. I want us to get over this range, get over $25, $26 range, and then I'll be bullish. The problem with GameStop is like, then that means it could be too late. I posted this last week. What I didn't like initially was that GameStop didn't react to the rate cuts like the rest of the market did. And that was almost a red flag to me, where I started thinking, okay, we might take out the sell side level in the 1870 range. We might even take out the 1780 sell side. And then if the market overall starts really seeing weakness and it pulls GameStop down, we have to just be on the lookout for this weekly fair value gap and the sell side here. And then, of course, on Friday, what happened? We got good amount of volume. We got a good amount of volume, which means we have been making higher lows, which you like to see. And the other thing is, it like eerily makes, like, if you look at this, retrace, boom. Kind of reminds me, I'm not like a big fractal guy. I know that people are out there looking at this, but retrace, then boom. So, you know, anything could happen. I wouldn't be surprised if Monday we come out of the gates hot. Let's see what happens. Ideally, we do. Then we come back and test this area that I've been waiting for, and then I could really start jumping into calls. But I have comments at GameStop. I like GameStop. I think the 6-month chart looks great. I think this is a long-term play. Just be hesitant. Just watch out for the FOMO. Check yourself. You can make a lot of money on this one, but you just have to be patient. So again, recap. So went over futures, understanding that there was the bearish divergence, which is overall making me feel bearish going into the week. I think the market needs to have that retracement so that it can get the juice that it needs to continue making new all-time highs. Looking at Apple, Apple had that major rejection at buy side, high volume that could pull down the market. Google, on the flip side, has been lagging and looks pretty decent. So we could be looking for some upside there, especially if the market starts turning around later in the week. Google is going to be one of my favorite plays. Same thing with MU. Wait for earnings. Look to see if earnings gives us that target when we retrace back down, hopefully to that imbalance. And that gives us a great target off of the golden pocket to go long. And then Netflix, I do think that it's still, even though it took out those buy side levels, technically, I think that it's still, I would have expected a bigger rejection. So I do think that there's more in the tank there, but I am bearish long term on Netflix. And then JP Morgan, same thing. JP Morgan, am bearish, looking to see if it presents a short opportunity. It's already at the discount range or nearing that discount range of that daily fair value gap, daily or weekly fair value gap that I was targeting. I think it was daily. So I want to see how it reacts there, and then might go short. So IWM, I do things due for a little bit of a retracement before it starts taking out that buy side level above. So I'll be looking again for another either 707, the golden pocket range reaction to possibly go long. And then same thing with AFRM. AFRM, I'm looking for just kind of see what it does out of the gate early this week. But I do like longer dated calls. And again, I am in commons with AFRM. And then GameStop, I'm also in commons. I wouldn't be surprised to see it jump out of the gate hard. There could be some halts this week. Let's see what happens, but be patient with that one. Ideally, we come back and test the $25, $26 range, and that gives us an entry. But let's see what happens. I hope this was helpful for you. I know there was a lot of rambling. I'm sorry for that. So hopefully it helps you just understand like what your buy should be going into the week, and really make sure that you're precise with your entries and targeting. Like I said, let's be patient. Maybe we see some upside later in the week and we could really take advantage of that. But hope everyone has a great week. Let me know if you have any questions, and much love.